Hey everyone, welcome back to Corporate Decoder, where we decode the hidden stories in corporate filings. Today, we're diving into a report from the Greenbrier Companies, Inc. Get ready because this isn't just about numbers, it is about what those numbers mean for anyone who owns a piece of this company. And even for everyday folks who might not realize how much they're connected to the world of freight. And if you like getting these insights delivered straight to you, make sure you hit that subscribe button and join our Discord community with the link right there in the description. It's a great place to chat more about these filings. So what we have here is a current report, a sort of quick update for investors from the Greenbrier Companies, Inc. It's filed with the US Securities and Exchange Commission, or as many people know it, the sex sync of the sexy as the watchful eye that makes sure companies are playing fair and telling investors the real story. This particular filing is an 8K. Now an 8K is typically used for big news that investors need to know about right away. It could be anything from a major acquisition to a change in leadership, or in this case, something a bit more routine but still important for shareholders. The company we're looking at is the Greenbrier Companies Incorporated. They're a pretty big name in the transportation industry, specifically when it comes to building and rebuilding freight cars. You might not see their name on the side of a truck, but their products are essential for moving pretty much everything you buy. They're incorporated in Oregon, and their stock trades on the New York Stock Exchange under the ticker symbol GBX. That means if you are looking to buy a piece of this company, that is the symbol you'd use. Now let's get to the heart of this specific update. The main piece of news here, under what they call Regulation FD disclosure, is about a dividend. What is a dividend? Well, think of it as a company sharing a slice of its profits directly with its shareholders. On the 23rd of October of 2025, Greenbrier announced they're giving shareholders a cash dividend of 32 cents for every share of common stock they own. This is a pretty standard way for companies to return value to their investors when they are profitable. The important dates here are when you need to own the stock to get paid. You had to be a shareholder of record by the end of the day on the 12th of November, and the actual payment will be made on the 3rd of December. So if you own shares then, you would have received a little extra cash. This signals that the company is generating enough cash to reward its owners, which is generally a positive sign. It suggests good operational performance, at least in the period leading up to this announcement. Then we get to the part where they list what's included with the report. Exhibit 99.1 is the actual press release announcing this dividend. They're essentially attaching the source of the news directly to this official filing. And Exhibit 104 is the cover page interactive data file. This is part of a push by the sexy to make financial data more accessible and searchable, so computers can read and analyze it more easily. It's all about transparency and making it easier for investors to crunch the numbers. So digging a bit deeper into what this dividend tells us about Greenbrier, it implies a healthy cash flow. Companies don't usually pay dividends unless they're confident in their ability to generate consistent profits and have enough cash on hand to cover these payouts. For Greenbrier, a company that manufactures and services freight cars, consistent demand for rail transportation is key to their success. A dividend suggests they are seeing that consistent demand and translating it into tangible financial returns. Now, let's think about what this means in the bigger picture. The rail industry is a backbone of the economy. When freight car manufacturers like Greenbrier are doing well enough to pay dividends, it often signals broader economic strength. More freight is moving, businesses are expanding, and there is a need for more rail infrastructure. Conversely, if they were struggling, it might indicate a slowdown in economic activity. In terms of competition, Greenbrier isn't the only player in the freight car market. Companies like Trinity Rail and Watco also compete in this space. Their ability to win contracts and deliver high-quality products efficiently is crucial. A dividend suggests they are managing their operations effectively. Even with competitors in the field, they are likely maintaining a competitive edge in manufacturing, repair services, or perhaps a combination of both. This is a good sign for their long-term strategy. What are the risks? Well, the rail industry can be cyclical. Economic downturns can significantly impact demand for rail transport, which would in turn affect Greenbrier's business. Additionally, changes in trade policy, fuel costs, and environmental regulations can all play a role. However, the fact that they are paying a dividend right now suggests that management feels these risks are manageable or outweighed by current opportunities. Looking at their overall direction, the Greenbrier Companies Incorporated seems to be navigating the transportation landscape effectively. The announcement of a dividend is a clear signal of financial health and a commitment to shareholder value. It indicates they're not just surviving, but thriving to a degree that allows for profit distribution. This is a positive trend for investors and a sign of stability in a crucial sector of the economy. My take is that this dividend is more than just a handout. It is a vote of confidence from the company's leadership in their business model and future prospects. It tells us that despite the usual ups and downs of the industrial economy, Greenbrier is currently on solid ground. They're likely seeing strong demand for new railcars and the services needed to maintain existing ones. This is good news, as a healthy Greenbrier often reflects a healthy movement of goods across the country. Alright, that is our breakdown of the Greenbrier Companies Incorporated's latest filing. What is your take on this dividend announcement and what it signals for the company's future? Were you a shareholder who received it? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finance. Don't forget to check out the Discord in the description for more discussions. Thanks for watching, see you next time.